Luxury brands are also eyeing the impact of potential tariffs. Now, Davos, Ralph Lauren's CEO, spoke with Yahoo Finance about his company's exposure specifically to China, warning that a tariff would be a pressure point here for the retailer. Let's take a listen.
China has some unique expertise in certain categories for us. Some of our more sophisticated sweaters are made in China. Some of our more sophisticated footwear is made in China. I think under duress, we could always find alternatives. And as you can imagine, we're running all types of scenarios to be prepared.
For what these tariffs could mean for the luxury sector, we want to bring in Markus Hansen. He is Vontobel's portfolio manager. Markus, it's great to have you here at the desk. So help us make sense of this. We were having a debate in our morning meeting just how exposed luxury retailers are to the threat of tariffs. Obviously, given the fact that Europe is not included in the threat this weekend, how should investors be thinking about that?
Absolutely. So great question. So if you look at the European luxury goods companies, and by the way, it was worth noting that Mr. Arnault, who's the biggest shareholder and runs LVMH Group, was at the inauguration with members of his family. The US is a very important market. For the bulk of the luxury goods companies out of Europe, they manufacture 95+% of their products in Europe. The beneficiary of recent weeks has been the devaluation of the euro. Since the election, the euro is down 10%. This is why if you go to Europe, you're seeing it's almost like the Normandy invasion of Americans coming over to shop and go skiing. So that's good news for the businesses. As far as production and other things, look, at the high end of the kind of companies we like, who've been through ups and downs, recessions, pandemics and so forth, the likes of Hermes, Richemont, which owns Cartier and Van Cleef, Brunello Cucinelli, the king of cashmere, their customer base generally is not impacted by increases of prices mid to high single digit. They'll do fine. And if anything, the euro offsets any impact of some near-term tariffs. It's really more the mid-range where there is an impact and where maybe you'll trade against something else. You just had the CEO of Ralph Lauren on TV, fantastic CEO, has done a great job with the brand. They could actually benefit in the US maybe from some other sort of competitor moves. But overall, the luxury universe is driven by the growth in high wealth net individuals. The wealth factor, if you look around, stock market all-time high, real estate all-time high. People, there's this vibe session effect. They talk bad, but people feel good. And if you go out, bars are full, restaurants are full. That's playing to luxury goods. And in the recent batch of results, and I think last time I said we were talking about this ahead of this, the US in particular stood out as particularly strong. The US is about 25-30% of market for a lot of these guys. And it continues to be an area where they feel there's still lots of traction to go. And by the way, at the same time, China's less worse. So you've got a nice combination offsetting. But where you're seeing it first is in the currency. And for now, that's actually playing to the Europeans because of that devaluation effect.
So I know we haven't really moved the tariff conversation from Mexico and Canada necessarily to Europe, right? But how bad would the tariffs have to, what is the case where tariffs are bad enough that it would be a concern? And is that even something you're considering on the table? Look,
you've seen the initial broadside against Canada and Mexico, that sort of 15, maybe 20, 25% number. Could be part of negotiations. Remember, specific to that, that's also maybe part of the USMCA agreement that's coming up next year. With Europe, you are still also seeing this discussion about US selling energy to Europe as part of an offset against tariffs. Remember, Europe used to import a lot of energy from Russia. That's been shut off. LNG exports now from the US, the biggest single market is to Europe. So I think as part of this administration, that trade is out there. Would I be surprised if we see a similar number? It's part of this administration's decision in terms of not just trade, but also negotiation. It could happen. But coming back to the overall impact, part of that's mitigated. I mean, we've had a 10% move in the euro. So you could almost argue if I come out tomorrow and say 25%, it's actually 15. But net, these companies, particularly at the high end, do have an amazing pricing power. Remember, none of these companies have been around for almost 150 plus years. They've seen a lot, world wars, recessions, ups and downs. Tariffs are not new either, by the way, as well. If you look at European luxury companies, sales to China and other markets in emerging markets actually are taxed with luxury tax effects. So I'll give you another example, Ferrari, the car company. If you buy a V12 Ferrari in Italy and then buy it in China, the cost in China is 3 times because of taxes. So tariffs aren't new. Companies have seen this, and particularly in luxury goods, you see a lot of luxury taxes across the board. But headline-wise, yeah, it would be a negative.
What are they doing are they doing anything to further diversify their supply chains? Because we know LVMH obviously manufacturing some of their goods here in the U.S. How are you looking at that and how that evolves?
Absolutely. So maybe with Mr. Arnault's visit to the US, he, if you remember during the last administration, he, I think actually President Trump actually went down to Texas at the opening of the store, of the opening of the manufacturing facility. They have 2 in California as well, so there's 3. I wouldn't be surprised if you see some of that move over. Again, it's not for the super high-end stuff, because at the end of the day, if you're paying $3,000 plus, you want to see the made in France, made in Italy, the artisanal. But certainly for entry level, it makes sense. And again, the US market is a market where a lot of these companies still see a significant upside, both in terms of the take-up of luxury goods and the penetration of demand. And where you really start that is entry-level products, $300, $400, $500. Manufacturing's there. Texas, by the way, as a local market, is a huge growing economy. It's, it's been the fastest growing economy within the United States. There is demand there. Luxury goods companies 10 years ago did not have stores in Austin. They do now. Why? Because things are moving. So keep in mind, they're also looking politically and economically to be present in the US.
All right, Markus, always great to have you. Thanks so much.
Good to see you too. Thank you.